Okay, welcome to a capital hungry breakdown on Dow Jones, US equities. Of course, a lot of the fundamental concepts can be applied to other indexes as well. Of course, if you trade NASDAQ or S&P, but I just like to focus on Dow Jones personally. But anyways, we're going to do a full breakdown. We're going to remap key levels using the same concepts taught in Capital Hungry, go down the time frames, really dissect the market structure, and create some probable trade ideas with this information. Okay, so before we jump into it, quick summary. I know this isn't like trading a currency pair. Okay, this is literally the U.S. stock market, like all the corporations, earnings, all the people's pensions, all the stuff I talked about in the previous webinar, right? So it behaves a bit differently and it operates differently. And in my eyes, unless we have a major change in our overall economic system and our central banking system, truly in my eyes, stock market's forever bullish. Okay, any major dip is just used as a transfer of wealth, where you have like the working class citizens for 5 years, 10 years prior, then the market takes a heavy hit like 2008, and now the same thing has happened here, where this massive dip and drop in price in the stock market, it's not like it's screwed. It did, of course, impact banks. It did, of course, impact traders as well. But it mainly screwed over the working class people, right? The people who had 401ks, pensions, and all that. And of course, bullish stock markets support smart money, because who do you think bought it up from the lows? And as the feds were starting to pump it up, and as they pumped it up so late, right? One thing I want to address is these economic cycles, this repetition in history, it's not unknown. Even we are able to identify these things. The Fed, these guys are people who study the economy and are supposed to be on the forefront of making sound financial and economic decisions that's supposed to better all of our lives and better the world, right? But you're telling me they can't forecast that this crash was coming ahead of time and start stimulating the economy ahead of time? No, man, it's because that's not how the world works. This was meant to happen, regardless if it was coronavirus, a real war with Iran, it could have been some other type of catalyst to bring mass market fear. This is just an economic cycle that has been repeating in history and will continue to repeat unless we have a major change in like how our economies are run. So keep that in mind when you're dealing with the US stock market. And with that being said, it is easier to buy the US stock market than to sell it, because when you are buying the index or you're buying certain, let's just say mainstream stocks, you're really riding with smart money and you're riding with the support of the feds. You can't fight the feds, right? They literally have unlimited printing potential, and they will not allow the stock market to come hit certain low points, right? Let's just say stock market, in my opinion, comes down to 12,000, right? Takes out all of these other years worth of gains as well, and then more people get screwed, and then it gets bought up again, right? That's still planned. That's something the Fed is allowing for another transfer of wealth. This crash that came down to 18K is what they allowed. That's why when we hit 18K, what happened? You hit a circuit breaker. They literally stopped the short selling of the stock market, and then they started injecting the economy like crazy. That's manipulation. It's not like when price kept pumping to new record highs, you hit a circuit breaker and said, no more longs. You get what I'm saying? Because continued short selling of the stock market would lead to a financial collapse in the US. So you have to understand, bullish stock markets support smart money, and it's what the feds and it's what these corrupt motherfuckers want, right? So keep that in mind. That's why with this analysis, we're just going to keep that in the back of our head, that it is easier to buy. But this is a huge wick and low created to the 18K point. And if we get a lockdown round 2, I do see the potential for like that we are not going to have a V-shaped recovery, and we will come test some of these lows in better buy areas in the stock market, as a lot of the guys and smart money who jumped in from the lows with the feds, they can cash out some of their orders and then come back in again as market fear kicks in, price gets dropped down to the lows, and then buy it back up for the long-term economic recovery. I do see the potential for us to visit some of these low points if we get lockdown round 2 confirmed. Without a lockdown, sorry, does somebody have a question? No. Okay, so without lockdowns, we can have as many headlines about coronavirus cases spiking, deaths increasing. It doesn't matter. We are traders, and what we are analyzing is what impacts the financial markets, the economies. A lockdown is what's going to lead to more jobs being lost, economies being stagnant, consumer consumption dropping, people not being able to pay back their debts and loans, and that leads to financial collapse, right? That's what we need. That's pretty much what caused the first crash. We had that lockdown, and then the Fed started injecting the economy. Anyways, with that being said, U.S. stock market, Dow Jones, extremely bullish on any time frame you look at. We had a huge bounce off 18K. I'm just going to start mapping out key levels using the flat candle body tops and conjunction points on the yearly. And then we will, and of course, I'm going to put one at the very high peak. And then we will start going down to the quarterly time frame and lower time frames and just dissecting what's to come. My mouse is lagging a bit. Sorry about that. Live webinar? Oh no, we're not doing any live trading. It's like midnight. We do the live price action sessions on Wednesdays or Thursdays. This is just a breakdown where I invite members in case you have any questions, or you know what I mean, just to see how we break down the chart. I'm not going to go all the way down. I don't really see the need to mark off levels in like the 7,000 point area. You know what I mean? So these are just some of the main levels I marked off based on the 12 month. I'm going to go to the quarterly level now. Oh, okay, perfect. I'll just zoom in so you guys can see exactly the candle body points I'm going to use. Some of these will just be a bit different than just off by like maybe 50 points, right? It's not always exactly as we start going down to the monthly of our previous levels. I'm just showing the concepts of how I map key levels as guides. Some of these larger ranges, now I'm just going to go down into the monthly and use candle body conjunctions. But I just want to note that this jump, right? Sorry, screen unlocked. This liquidity grab came to a previous area with price sensitivity, right? And that monthly, quarterly level I was just showing you guys. And then that's just so corrupt to me. And then after this massive crash and all those people, the working class people who lost their jobs, got their pensions and 401k sweat, then the feds jumped in and said, no more short selling of the stock market and let's start pumping the economy like never before. And we had this even with all the massive fear, even with lockdown still going on, you have this massive artificial market created where it's not like the people who lost their 401ks and pensions got to get it recovered. They already lost their money. It already went from their hands and went to the whales and went to the banks, right? It's just who's really in at this point up into the rally of here. It's not the middle class working people anymore. It's the whales. It's the 1%. It's the guys, it's the people like possibly us in the future who are aware of these moves happening and can take advantage of it, even though it is very corrupt, right? You're telling me these central banks couldn't stop, or the feds couldn't stop the short selling here? Why did they say circuit breaker here? Why did they say, okay, wait, this is enough here. Let's stop the short selling of Dow Jones. Let's start injecting the economy now. We're seeing the signs because this is meant to happen. It's meant to be used as a tool to transfer wealth. It was their choice when to say, let's hit the circuit breaker and stop short selling on U.S. stock markets. Let's start injecting the economy. It was all their choice. And they have unlimited printing potential. Crazy corrupt, right? I talk about this in more detail in the transfer of wealth webinar, but it's just something to note, like this massive recovery here. But I do see the potential for a lot of these whales and 1% who got in, because think about this gain from getting in from the lows. Even if you got in from 19K, it's almost 7,000 to 8,000 point upside. That's billions of dollars, right? If we have a lockdown round 2 happen, all that's going to happen is late buyers are going to get screwed. The people who think the market is recovering and are jumping in late are going to get screwed, and the whales are going to close off these positions that they've been holding out, and then the market's going to take a dump. And I see the potential that if we don't break above some of these key price sensitivity areas, especially as we're coming into a new quarterly period, like this 3-month candle just started, I see the potential for us to partially fill the wick range, which we are already almost doing. And then if we get the lockdown confirmed, this candle flipping bearish and coming to test some of these key candle body areas to the left and filling some of that yearly wick fill, and then continuing up on signs of economic rebound, or even going a bit lower. I honestly want to have a big short play on lockdown round 2. Otherwise, all I'm really looking for is a potential pullback to some areas of interest and creating a deeper quarterly wick and a 1-month wick, which I'll show you guys, and then continuing up to the upside. Because if we can have as many of these coronavirus headlines as we want, if we don't have anything to negatively impact the economies or new type of catalyst to come, then this smart money sentiment is going to rally back to the highs. It's going to go back to 30K. It's just going to further support the guys and the big boys and the 1% that were in from the lows and just make them even more money, because why not? So when you're dealing with the stock market, or you're dealing with like Dow Jones, for example, you have to understand the fundamentals like this that are impacting it, right? You don't want to be constantly trying to short sell Dow Jones just because it's coming to a resistance or a trend line point or a seller's area, because you know every time you sell Dow Jones, you're going against smart money. Yes, you might be able to get some points, but look at an intraday perspective on DJ. Every pullback gets bought up. Every major sell point gets bought up to a new high. Every major sell point gets bought up to a new high. This is the next major sell point. It looks like we have the potential to get bought up to a new high, unless we have what? Mass market fear, which then in turn would validate this exhaustion and then have price break this bullish market structure technically, and have smart money close off their long orders and cash the fuck out. That alone would cause a massive drop in price on US equities. And then with that fear sentiment, start riding the waves back down to these low points, where this was the low point created from the initial COVID crash. And even if we come down to like 21K, 22K and make a higher low on the higher time frames, that would be a great rally point for them to get back in too and make even more money. But yeah, that's what. It's difficult to sell DJ and try to extend sells unless you have that strong fear sentiment behind you. So I'm just dividing up some of these ranges to give us better areas of interest to work with on an intraday perspective. I'm just going to round them off, and then we'll watch how price has played out through these levels, if we can use them as accurate guides in recent price action. And then, of course, we'll just start zooming in the time frame to see what probable trade ideas we got. So far, if you just notice what I was looking at on the 4-hour, still very bullish, the structure. Shit, I forgot what this number was. I'm just going to go to the weekly to get some price sensitivity points here. Some candle bodies to use as zones. A bit actually on the bodies. This is why in every breakdown I don't map all the key levels over and over again, because once you guys see how price reacts even in recent price action, like even in the recent month or the recent week to these key levels, you're gonna realize like you don't have to map these key levels every breakdown. I just do it every once in a while so we stay sharp, you know? Don't get lazy and stuff. Sorry, the weekly on my eyes there for a second. We'll go to, oh, I didn't do the rewind. We'll watch what? We'll watch the whole recovery. Let's just see how these key levels were respected or not. So far, pretty good. Respect to the key levels, even in the recent last 3 months of price action. So we will use these key levels as our main guides. Right? You guys agree with that? Some nice reactions. Good to use these higher time frame key levels as our guides. So now we'll just start dissecting the market structure. I want to note this overall bullish market structure. Where unless we have mass market fear and a break below 25K, I don't see any safe sells on Dow Jones. With that being said, I'm looking for pullbacks to 25,580 and to continue holding structure. You can see sellers came into the market. They found this low point, which is at our key level, and 25K around that flat point area. Then you saw buyers jump in, create a lower high point. Sellers come back into the market and fail to break the previous low and respect our bullish trend line as well and that technical bullish structure. And we're starting to test previous highs. If we get a pullback and maintain the structure and break this lower high point, you can have safe buys above 26.65 or take higher risk buys off 25,580 key level in a retest of structure or these key levels. I see upside to test these highs. I only see sells below 25K because you would be breaking structure. You'd be validating this exhaustion, failing to break these high points and failing to break that lower high, finally break through this low point and our key level, which we failed to break multiple times, and have market fear, as well as we need lockdown. If we have lockdown, this is going to happen. And then we can wait for the impulsive break, pull back to retest structure and start selling it down. Okay. Otherwise, this is multiple attempts to try and break the bullish structure with a lot of the fear-filled headlines, with some of the negativity. But as we know, smart money supports stock markets. Feds support injecting the stock markets, and smart money is who's in the stock markets right now. That's why even with all this mass fear, even with the protests, even with the riots, it doesn't matter because this is an artificial propped up market because the feds jumped in after all the working class people got fucked. After their liquidity got taken out, moved from one hand to the other, who do you think bought it up from these lows? The same people who robbed the working class people. And then the Fed said, all right, it's time to jump in and save the economy now. How come they didn't say that? I don't know. It just makes me so angry. How come they didn't say that up here? Because I know people and like family members who got pensions and stuff for retirements impacted. And this is the reality of it. This is the chart. This is what it painted out, So this right here, all this upside has been happening during mass market fear because they are injecting the economy. You can't fight the Fed. You cannot fight the Fed. As long as they control our money system and they control money supply to countries, and this is how our economy runs, nothing will break this cycle. Once coronavirus fades out from the market and everything goes back into economic recovery stage, just like what happened post 2008, maybe 5 years, 8 years, 10 years will pass. Something else will happen to repeat this cycle. I guarantee it. Unless we have a change in the central banking system. But anyways, talking about here, I'm looking for pullbacks to test the structure and buys above 26,650 to test the previous highs and go more to correct the downside move. Only sells below 25K and those lockdown confirms, I'm telling you guys. Sorry, I didn't check. I'll check questions shortly. I'll check questions in a second. Does that, I'll just say that, yeah. Does that make sense? Like how buys are along with smart money. You're not fighting the Feds. You're going with the Feds when you're buying the stock market. We don't have any confirms of a lockdown just yet. The multiple attempts to the multiple attempts of sellers to try, like, look how strong these sellers impulsive candles were, and it still stayed above our key level. Then you had buyers jump in, correct 50% of the downside move and create that lower high, and you're like, okay, we can get some more sellers pressure in. That sellers pressure did come in. It was a lot, the momentum was a lot weaker, and it stopped on a dime at our key level and that previous low. That's not enough sellers momentum or sell orders to break structure and to have that meltdown. And we're almost coming back to test these previous lower high points. We can get a little bit more liquidity generated and then have enough juice and buyers in the market to break the high, or we can break and retest the high. And once we break that lower high point, you easily are going to correct this downside move and go to like a new higher high in this structure, because that's how the structure has been running. Only sells below here. You can see it too zoomed out. Only sells below here with market fear. Trust me, I want like a market fear and market crash, because it'd be cool to take a big short like the movie, you know what I mean, and make a shit ton of money on it. It'd be very cool. And it'd be cool just to experience it. It'd suck for the world and stuff, and like a lot of the working class people again, but man, like it's not like me feeling sad or us feeling sad is going to change this happening or prevent it from happening, right? So we might as well learn to take advantage of stuff like this as traders. We don't have too much U.S. data this week except for the jobless claims and the JOLTS jobs opening, where if that's following suit with the last two optimistic NFP reports, it will bring more market optimism, and that it's showing signs of economy starting to open up again and like people going back to work. That even in the short term can bring optimism to boost equities. But the only thing that will cancel all this out is lockdown confirmed round 2, economies being stagnant. We were talking about how a lot of banks are noticing massive order switching from like stocks into bonds. And if you don't know, stocks and bonds like work hand in hand. Like you could hedge one with the other. They move in opposites, right? Like whenever stocks are extremely high, bonds are low, and vice versa. So a lot of major banks have been seeing order flow switches of quote unquote smart money moving into bonds, which is telling us they might be anticipating a major crash coming into stocks. But that's just rumors, you know? All right. Is it okay if I sign up for a macro econ class? Yeah, do your thing, man. Or is all I need in capital hungry to get fluent like me? You want to get fluent like, I never took like I took a macroeconomic class when I took general business. There was a macroeconomic like class, a part of the overall course, but it doesn't like teach you stuff like this, man. This is like the market will teach you, you know? You go through these experiences. What's taught me so much is just being involved in the markets and asking why. I've been involved in the markets for only 3 years, but in that 3 years, I've seen political issues between countries such as Brexit. I've seen trade wars. I've seen almost physical wars come up. I've now seen what biological issues can do. You know what I mean? Like what a pandemic can do. These are the types of experiences that teach you about the market and teach you about the real world. In your macroeconomics course, they're not going to tell you that a trade war between US and China is going to heavily inflate the price of gold. You know what I mean? They're going to tell you about tax. They're going to tell you what tariffs are. They're going to say, "Oh, these are tariffs. China and US exchange a lot of rice, a lot of soybeans." They're going to tell you like information like that. It's not really relevant to help you go trade the markets. Right? The macroeconomics course isn't going to really tell you about the impact of Brexit, or it'll tell you about possible trade deals between the euro and stuff. You know what I mean? PMI and GDP. The only reason we haven't been focusing on data as much in here is because the market has been running heavily on sentiment. But if you go to like, what the hell we got here? We used to do a lot of these. We used to do a lot of data analysis and breakdowns of the data by looking at, sorry, where's it? Like we used to do a lot of these. You'd be surprised how much information this main feed has. We've been tracking the markets like we are now since like last year, 2019, recording everything from like what's happened to UCAD back then. What's changed? You know what I mean? Just getting more sharper and more refined with what we do, but nothing's changed as per what we watch. Back then, when there wasn't coronavirus, there wasn't mass trade war, when you were trading UCAD, it actually made a difference what the core retail sales report was going to be, because that's what investors were looking at. What's showing us the health of the US economy? And at that time, you weren't looking at the coronavirus. You weren't looking at a potential real war. You're saying, oh, how's the US's retail sales? So that's why we would do a full breakdown of the retail sales, what we've seen with historical analysis, what we've seen with previous reports, what we can expect with this report alongside with technical market structure and fundamentals. When it had impact, we focus on that stuff. In these conditions, it's all sentiment. It's all based on everything's around the focus on coronavirus. Most data reports already have extremely bad or buffered forecasts, and it's all the data is expected to be poor. Anything better than that is just taken as good data or as optimistic. Back then, there was no clear expectations for the data. It was just heavily dependent on the retail sales health of the US economy for that month. Where now you're like, no shit, retail sales is bad. Nobody's shopping. No shit, CPI is bad. No shit, GDP is falling. Fucking the world's on lockdown. You know what I'm saying? Does that make sense? It's all expected now that the data shit. So anything good is taken as optimistic. But like these types of little PDFs I used to make, they have like what CAD CPI is, my analysis of CPI, the impact of it, my bias, previous reports. Like you can learn a lot from the channel, trust me. We've been focusing on the same thing for a long time. Markets attract those who want to make money quickly, but reward those who are comfortable getting rich slowly. Thank you, doctor. I don't know how to say your name, bro. Forgot. Look, we've been watching trade war deals, the trade war cycle. But back then, it wasn't coronavirus vaccine, optimism, weakness. It was like, yo, trade war. Fuck. Trump's going off today. One day Trump would be happy. The next day he'd be pissed at China. Then you're waiting for China's reply. Like we were watching headlines in that fashion, you know? There's always something. There's always going to be something. That's the beauty of it. You just have to learn how to read it. And then the same thing when like Bank of England Carney used to speak. This is when gold was in the 1500s. Yeah, like the Iran war stuff. We were going crazy in here. We've been watching this like Iran stuff since back then. Further Middle East tensions as explained. This is before World War III happened, October 15th. Did we know it was going to be what happened? No, but could we anticipate that there was going to be Iran drama? 1000%. You know what I'm saying? So yeah, we've been doing. I even used to do this, like chain of events analysis. Gold. This is what caused gold upside. This is what caused the bounce, the NFP data that day. And then we had some consolidations. If you guys really want to learn, like we've been doing the economic events, the trading tips, it just used to be typed out. There's a shit ton of information in this channel, a ton of information, like never ending. Explosion near Iranian tanker, like a never ending amount of information in this channel. If you really want to go find it, that's up to you guys. I already have all this in my head because I was one doing it. Monthly levels, stuff like that. You know what I mean? When we were first. Yeah. So yeah, it's all in there if you really want to go in there. But yeah, that's what I see for Dow Jones. Any questions about how we map the key levels, the market structure? What is safe sells? Otherwise, we're looking for breakout buys above 26,650. or a retest of the market structure in 25,580, I'll set up price alerts. These levels are pretty much the same as last time. They might just be off by like 20, 30 points just because, like, you know what I mean? It's not. And if you guys ever see any mistakes in the key levels, like sometimes I switch a 3 and a 1 or 20, it's because this. I manually type it up like this. So if there's ever any errors, just be like, gee, man, you just said Dow Jones is at 28,000. I'm like, oh shit, sorry about that. And then I can quickly fix the alert, you know? Just let you know. And I don't like to say like, I don't like how it says US 30 USD. And some people don't even know what that is, like the different symbols for it. And then we'll just keep one at 25K just in case. Let's put 25K flat. It's only 30-point difference. Same idea. Okay, any questions? Otherwise, I'm going to label this, save it, and send it over. We don't have too much US data this week besides what we're talking about. So far, fairly quiet week. I thought post American holiday, these guys would have been going crazy, but it's all good. Sometimes the market ranges. Sometimes you have impulsive moves. That's just the nature of the beast. If no questions, I'm going to save this and send it over and upload it to Vimeo and stuff.